Hello everyone, this is CA Prachi Parekh, and in today's short video we are going to look at the provisions of section 54 of the Income Tax Act 1961, and we're going to have a look at the amendment which was brought about by the Finance Act 2019 to the provisions of section 47 as would be relevant for assessment year 2021. So in this very short video I'm going to cover the provisions in brief, the amendments of this section, and I have covered one illustration pertaining to the amendments. All the provisions which are discussed in this particular video are relevant for assessment year 2021. This video would be useful for students of CA Inter and CA Final who are set to appear for the November 20 attempt. Apart from this, it would also be useful to other taxpayers who are looking at investing in terms of residential properties to understand the implications of Section 54 of the Income Tax Act. Let us move on to understand the provisions. Section 54 of the Income Tax Act 1961 deals with exemption of capital gains, which are typically long-term capital gains incurred on account of sale of a residential property. The eligible assessee who can avail exemption under this section is an individual or an HUF. The long-term capital asset which is transferred is a residential house. Now, this particular property which is transferred has to necessarily comprise of a building, and additionally it could have land which is appurtenant or adjacent to such building which is being transferred. The new asset which is to be acquired or constructed by utilizing the capital gain component from the transfer of the original asset is one residential house in India. Now, this is exactly that part of the section wherein an amendment has been enacted by the Finance Act 2019. The period which is available to the assessee for acquiring or constructing this new residential house is as follows. In case the assessee wishes to acquire a new property, the period which is available at the disposal of the assessee is 1 year before or 2 years after the transfer of the original asset. If the assessee looks at constructing a new residential house property, the period available to him is this construction activity should be done within a period of 3 years from the date of transfer of the original asset. Moving further. The quantum of exemption under section 54 is the cost of new asset that is acquired or constructed, or the amount of capital gains from the transfer of the original capital asset, whichever is lower. Supposing the assessee has still not acquired the residential property or his construction activity is ongoing and the due date for filing return for that particular assessment year has come up. In this case, the assessee can deposit the intended amount of investment he is planning to make in a capital gains account scheme and continue to claim the exemption under section 54. The new asset which is constructed or acquired has a lock-in period of 3 years. So, for a period of 3 years from the date of acquisition or the completion of construction, this particular property cannot be transferred. In the event that there is a violation of this particular condition, in that case, in computing capital gains for such transfer in the sense transfer of the new residential house which was acquired to avail the exemption. In computing capital gain for such particular transfer, the cost of acquisition of the new asset will be reduced by the amount of capital gains which was claimed exempt earlier. Needless to say, the capital gain which is arising on transfer of this new capital asset is going to be a short-term capital gain in most of the cases. So these were the provisions relating to section 54 to the amendment which has taken place. So as we saw in the first slide, the new asset which was to be acquired had to be one residential property in India. The amendment which has been effected is as follows. In case the capital gain which is incurred from the transfer of the original capital asset being residential property is of an amount of 2 crores or less. In this particular scenario, the assessee can acquire or construct 2 residential properties instead of one. So here the assessee has been given a benefit of investing in two properties and still be eligible for claiming the exemption offered by Section 54. What is to be noted is this option of claiming exemption against two properties is available only once in the lifetime of the assessee. So he cannot do a repeat of this investment planning for another situation. It would be applicable only once that he decides to invest the capital gain incurred by transfer of a property in investing two properties. The criteria is the capital gain component should be 2 crores or less. So they are typically looking at investing in affordable housing. Understand the amendment in a better perspective, let us have a look at this simple illustration. Mr. Raj sold a house property at Delhi for 4.5 crores. He had purchased the same on 15th December 2008 for 1.5 crores. He's purchased two house properties, one at Indore on the 17th of January 2020 for 50 lakhs and another one at Kochi for 75 lakhs on 20th July 2020. Compute the amount of taxable gains in the hands of Mr. Raj for assessment year 2021. So very simple illustration to kind of bring or drive home the effect of the amendment. This would be relevant for students who are looking at this particular amendment from their exam perspective of the CA inter category. So let us plot this particular illustration in a solution, and this the full value of consideration or the sale consideration which is given in the question is 4.5 crores. So I have just used the formula for indexed cost of acquisition, the current year's cost inflation index being 289. So my index cost of acquisition comes to some 3 crores 16 lakh 42,000 odd rupees. My gross long-term capital gain in this particular illustration is 1 crore 33 lakh 57,664, and as you can see it is below the threshold of 2 crores which has been stipulated by the amendment to section 54. So both the investments which are made, one at the property in Indore and the other one for the property at Kochi, would be eligible for exemption under section 54, which takes my cumulative amount eligible for exemption to 1 crore 25 lakhs, and my taxable long-term capital gain in this illustration comes to some 8 lakh 57,664 rupees. What has to be noted here is Mr. Raj can avail this exemption under section 54 in respect of two properties only once in his lifetime, and he has exercised that option available to him for assessment year 2021. So this was the provisions of this were the provisions of section 54 and the amendment which was brought in by Finance Act 2019. I've kept the video short, so I hope all of you are now clear with what the intention of the amendment is. If in case of any queries, you can get in touch with me on my email address, which is caprachiparekh@gmail.com. You can subscribe to my channel on YouTube, which is CA Prachi Parekh, and I would be posting such smaller videos pertaining to amendments and other relevant updates for the subject of direct taxation. Thank you, everyone.